Just lovely. Hey everybody, it's me back again for my lovely. We're going to talk about this piece of paper in a moment because I have a lot of stuff here. Believe it or not, I took some notes today. I never do that, but it's just important. I want to cover some of that stuff here, so I'm going to read some of that to you, and I believe you're going to find it enlightening. Okay. Let's talk about a few things here. So stocks did finish the week higher. So I did get this wrong. If you recall, last Saturday, I had said I was neutral to bearish on this market. I also explained to you it was all about that 10-year yield. They managed to keep the 10-year yield below 3%, and that is what was the driving factor here behind the stock market. Now, did you watch the video that I did this morning? Well, if you had, you would have witnessed something pretty, interesting, I suppose. That is that they were buying up those bonds, sparking a rally here in the debt market, which sparked a rally here in the stock market. I did cover the jobs number miss today. I also covered how it's being spun as a good thing by the Confederacy of Dunces over there. They're also trying very, very hard to spin the fact that people's wages are just not rising. How that can possibly be spun into something positive is beyond my wildest dreams, because I can promise you, if any of those on the Confederacy, if all of a sudden their wages dropped or they didn't get a raise for a year or two, they wouldn't think it was too nice. With a show of hands, how many of you believe that? Yeah, that's exactly what I thought. That was just about every single one of you. All right, look, let's just get right to my lovely list here. Yes, I am crazy. I am out of my mind. Likeness? What do you think? All right, look. So before I even move forward, I want you to understand what I'm about to cover here has nothing to do against President Trump. Seriously. The only thing I don't like about the president right now is, well, you know what? I'm not even going to say anything until I finish reading this. But understand, and I really hope that none of you out here are naive enough to believe that a country is run by a president, a king, a dictator, a monarch. It's just not true. The banks run the world. The banks run the show. The banks run your life. And I know a lot of you are going to say, oh, they don't run my life. Really? What do you do every day to earn some cash? Who do you work for? Well, you're working for them. That's really the truth. Those bills that you think are yours, they're not yours. Look at them. Federal Reserve note. It's owned by the issuing central bank, in this case the Federal Reserve, and it's owed back to them plus interest that they print out of thin air. So it's the banks that run the world, period. So let's just cover some of these lovely things. So it's pretty straightforward here. The narrative is this is as good as it gets. We're in an economic boom here, and it's the best economy that we've ever had. I mean, these are not my words. These are the words of our president. Now, let's cover some. As a matter of fact, we got six bad economic reports this week that I'm just covering here. There were probably more. These were just ones here. Number one, we find out, you ready, that the Treasury Department says it will be increasing the size of its bond auctions in the coming months. Why would they do that? Because they have to fund the day-to-day activity of our country. Now, the reason for that is pretty simple. The money velocity, the rate at which cash is moving through our economy, is near a historic low. Without cash moving through our economy, which you would see in a boom, there's no cash dollars that can be collected for taxes to pay for everything. So we got to borrow it. You understand? That's number one. Now, let me just say this real quick. You've heard me before. Despite whatever unemployment numbers were fist-fed to us today, 3.9%, the labor force participation rate. Look this up for yourself. I posted it all over the place in a graph. Is near historic lows. Think about what I just said. The labor force participation rate is near a historic low. Moreover, the money velocity is also near a historic low. Without these two factors moving higher or being in a normal range, we can't have, not only can we not have a recovery, which we do not have, everything is built up on the back of debt. We don't have a boom, we don't have a recovery, we have nothing. So let's move forward here. We also found out that the U.S. trade deficit remains on track for a 10-year high. How's that? Awesome, right? Well, you know, with the debt-based economic model, we can't have a balanced budget. We need to continue to run deficits and debts. That's how it functions. The relentless acquisition of debt in perpetuity, period. All right. Housing demand, we found out that had the biggest drop in 2 years. Now, again, I don't want to hear because of a lack of supply. This is a lie that a lot of you seem to be believing. I mean, the fist is being shoved down your throat and you're buying it. No, it's simply the lack of affordable housing. The average guy, the average girl can't afford the price of an average home. That is the definition of a bubble in the housing market. Very simple. We also found out this. The ISM services production for new orders and indexes dropped. No, excuse me. The ISM service production and new orders index dropped sharply. Well, I guess they didn't get the memo about our booming economy. The Commerce Department reported that construction spending fell 1.1% in June, as both residential and non-residential spending dropped. Awesome. The Institute for Supply Management Index dropped to 58.1 in July from a previous reading of 60.2, the lowest reading since April. I guess they didn't get the memo either. Awesome. Zero Hedge did a nice piece reporting that the number of Americans living in their vehicles has exploded as the middle class collapses. It's out of control here, people. And then how many of you caught the supreme leader of the Confederacy of Dunces, Steve Leisman, today, pushing his narrative that our economy is stronger than it looks? My question to you, Steve, is, okay, if that's the case, why is the Fed, their own words, going to maintain accommodative monetary policy for as far as the eye can see? It won't stop. Oh, well, get back to me on that one, Steve. Awesome. Look, there's a couple of more here. Not going to talk about it. It's just, I think I made my point here. We get no less than 6 bad economic reports this week. Anyway, and, everything is just great. It's unbelievable the amount of frank BS that people can be fist-fed and still believe the polar opposite is happening. Wow. I mean, I believe the dumbing down of America is complete now. How about you? All right, look, I don't know what else to say other than that, what I've covered here. I think it's all pretty interesting and all pretty lovely. With that said, I will see you tomorrow. We're going to talk more. I'll do my look ahead. Sorry I got this week wrong, but we did make money. We made money anyway in this market, and I think that's a good thing. And that's what this whole thing boils down to. And we will cover more of that tomorrow. I will. See you then, but are you forgetting something? Yeah, I knew it. I can't, you guys are really smart. Remember to love each other, care for each other, and be charitable. See you tomorrow. Bye.